transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is the euro upside down version of the dollar index. As you can see, I'm going to blow it up here so you'll be able to see the ABCD over the past week, 2 weeks filled to the exact tick, folks, within 10 pips of the exact tick. Just like the dollar index, it's the upside down version. So that tells us that the US dollar, if this is correct, should start to back off a little bit. The euro should rally. And now we're going to look at the old British pound. There's the dollar index. There's that same number on the dollar index. And now we're going to look at the British pound here because we had a buy-in on that. And it's just right here. So bear with me. We're going to start looking at this on the weekly because that's where the buy came in on. If you'll remember, get this up here. There it is right there. And it is, in fact, underwater just a little bit right now because we bought it at 122.58. So it's out 40 pips. Our stop is right below here. So if it makes a new low, then we were going to lose $600. At one time this morning, before the report came out, it had a $600 profit in it. That was right there. And that 600 profit just disappeared pretty good. Now, there's right here, where's where we bought it. There's where it is now. Right now, it's out about 30 pips or $180. So it goes below here. We're going to take a loss, and that's it. So that's neither here nor there. I'll go into one of these, try to cover these best as I can. We had a really fun session today in the trading room. I want to bring to your attention here a couple of things here. I wanted to show you, we were talking a lot about 382s and harmonic numbers and all that stuff, and this is the gold market. We had an earlier trade that made some money, and then look and see it dropped $22 and then rallied $50. Here was a perfect 382 this morning, folks. We were looking at that. I'll just draw this up for you and show you that's what we were watching. It's a couple of really beauties today that looked really good. A couple we didn't quite get filled in, but we had a good day, so that's important. Anyway, there's your 382. In other words, that's $18 down both ways. That means this is holding out. If we go below here, that means there's trouble in River City, and then we're going to have probably a move down in the market for the gold. I have to show you silver, folks, because we had Jason JY over of Singapore in there helping us with silver trades today, and he had a beauty for us. I have to show it to you because it was really quite interesting. We'll get it up here on a smaller time frame, and you'll be able to see it. First of all, you can see that number right here. I want to get to you. There's the 382. That was the first 382 buy right up here. That was worth 30 cents. And then on the way down, it was worth 30 cents. And so it didn't quite make the ABCD. The gold didn't make the ABCD, didn't even take out these lows, but this was one that we were watching really closely. And the other one, we had help from all of our friends there that were listening today in the natural gas. Beautiful day here. We had a just near perfect day in natural gas. I'll just get this up here and show you what that was like. Here's when, this is when we were starting the show, was right here. This was at 9 o'clock. Okay, the market came up, and we were waiting for this pullback right here, and we got a very nice pullback, giving us our first really good profit right there. Sold it up there, made $350 on that, and then we had one. I have to show you the gold trade because this is probably our best trade of the day, folks. Here's our gold trade. Let's get this up here on the 60-minute chart. I think that's what we were watching. Let's double check here. Yep, there it is right here. Here it is right here. There was the number we were looking at. Right here, we had a sell here on the gold, okay? And it got filled and it dropped down here. But before you could do anything, it already went back and got you stopped out at your same price or $2 loss. That's what happened. Really, I mean, really an amazing move. You can see from your high or from your low to your high, you didn't even make it 382. You did in silver, but not in the gold. Just wild markets, folks. You haven't seen anything yet. It's going to get wilder and wilder and wilder and wilder. That's what it looks like from the cheap seats here in Tucson, Arizona. Now we have an interesting formation coming up here for you guys that like 382 patterns. Here's the E-mini S&P on the day's range from the early morning high, not from the high back here yesterday, but from the early morning high. You see we're approaching. There was your first 382 retracement. There was a second when we called that one right on the money. It dropped down 35 handles, and now we're coming right back up, making another 382 right here. And it's midday. Market's trying to rally back, and maybe it will. Maybe it'll come back and take all this out. Don't know. All we're doing is looking at patterns, and that's what we're watching. So we're having a nice little rally here, started by none other than the big daddy rabbit itself, was a NASDAQ, because it could not make new lows on the day down here, folks. So that's why it held up pretty good. But just starting out, this is things we were doing while we were watching them trade. There was the early morning. See, we started at 9 o'clock. This is when the whole thing, we started right here. This is when we started. The first thing we pointed out was this trade right here. We said to do the Dow Jones because it was easier. But there was your 382. What did it do? It made the beautiful ABCD pattern to the downside. There's AB equals CD. Just about exactly right. I can't even get it done right. Exactly on the money. Then the market made new lows and then made a new high. So when you do that, we suggest that you do the new 382 retracement, and you'll draw that in, and you'll see that came in at the 50% instead of the 382, and then it couldn't make a new low. When we made a new low in the S&P, we made a new low in the Dow Jones, but we could not do it here. Now what it's doing is just rallying back to the 382. We're doing that in the S&P, but this was only 10 stocks, so this thing can move, bonkers. Anyway, we weren't trading that. We were watching the Dow Jones and the E-mini S&P were the ones that we were watching. Let me get my limit minder on here on this, because I want to see if we get to that level of 88, because I would like to know. This would be our biggest rally during the whole day. See, these rallies have been 30 points. This one was 30 points. And so far, this one has been a little bit more than 30. But there's your 382 setting in there on that one to pay very, very close attention to it. And speaking of 382s, we covered this in the video that we sent out last night. We're going to switch over here to crude oil here, because this was another one that was just absolutely spot on. We just missed the fill by a heartbeat, but it was a really beauty. Get this up here. See, there's where we are right now. We had this move right up in here, but here's, we said when this happened, we had to watch for the first 382. So what we were doing, looking at that 4-minute chart, there it was right there. There was your 382 retracement off of this move right there. I think we can get this up here and we'll be able to see it. There's your first move right here. There were two of them to work from. I think we'll do the one that we were shooting for, which was this one right here. This one had a little bit more of a bounce because it was lower, went to 719, and then bang, down it came, and then look, started to make a rally back, and that's what we're doing. Nothing but AB equals CD. That's the one it'll be for me. Our guest today will be Mike Moore of More Analytics, folks. So stay with us for more of the same.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th, for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, we're going to take a look at the corn market. We had a corn report while we were on the air today, and we suggested, because of the 382 on the daily, going back over the last year and a half, came in here at 472 to sell the corn at 472 in the March corn. So far, it got filled. It's trading at 467.5. There's nothing more than this ABCD pattern that lined up in here. We were watching that we were watching a lot of them, but we also were watching wheat. And, of course, we have a very bullish bias in wheat. I want to bring this up here because today we had a report. I haven't seen it after the report, but here's what our analysis was before the report. Okay, here's where we were. Bring this up here. Okay, get this up here, move it out of the way. Now you can see here, we've been waiting here for this to get to 5.14 a bushel. That was to be right down here. 5.14 would be right at this level right here. That's what we're looking for to possibly get to. Now today, all we did was we took out the lows from way back here. All right, let's move this over. We took out the lows from way back here, and then the market has a little bit of a rally into it. Now here's what's happened. Wow, that's a big rally. Hold on, let's get this up here and show you what it looks like, because I didn't realize it was that much. Yeah, there it is. There was we were trying to buy it a little bit lower. Then we had this big, strong rally into the report. Now look how much it's given back, folks. Unbelievable. You know, here it rallies 15 cents and comes down 10 cents. That's a 25-cent rally. So nothing's really changed in this market. No one believes anything. So if you looked at this, we were trying to buy the ABCD on that, and we didn't. So we didn't get it bought. There was nothing we could do. There was nothing to do here on the upside because it was so very fast. You know, so there was nothing to do in the wheat market. The corn was the only one that was the easy one to look at. But there was one other one that was also relatively easy, and that was the soybean meal. And we'll get this up here. We've been bullish this for quite some time. We said it to be a buyer, and look at the rally back, folks. It went exactly to the 382. Just exactly to the 382. Now, you had to be in it and had your order sitting there, because if you didn't get it filled, it's already down $1,000. There was your 382 in the soybean meal. Now, we couldn't count this trade because we had closed actually, right at the time, and this comes out at the same time. So this had the big run up after the report. We told them what the numbers were in the wheat and the corn and beans and all that other stuff, but they had to decide whether they wanted to be the ones that would be the big operator of what we're looking. Something exciting happened just a second ago, folks, in the markets, and that is for the first time today, the gold broke the 382 pattern. Let's get that up here, and you'll be able to see it without too much trouble. There's the 382. You see how it's broken? The 382, that tells us that the structure in the gold has changed to negative. Now, what we're going to do now is we're going to check and see if this is going to be the right move, A, B, C, D, and we're going to see if it holds up, because that would take you down to this level right here, about 27.10. Below 27.10, there's big trouble. And the reason for that is if you look at this on the really long-term daily, you can see here, all we did is these were equal moves. We didn't get that move to the downside because we started up. So there's where we are with the gold. Now here's the high from the 16th of December. Then we come down in to the 20th. Okay, and now we had a pretty big rally. You can see there's your A, B, C, D pattern coming in right here. We went substantially above the A, B, C, D, but we were protected. There's where we had a $2 stop on that, folks. That was our only loser on the day. It was a $2 loss in gold, but we made money in the others. Now, as we look at this, getting this out of the way, we want to look at the high from right back here, because now the fact that it stopped pretty close to the 78% level. The high was 35. This was 27. We're trading at 17 now. So this has the potential now to be a 1-3-5 pattern, because you have lower tops. There's your ABCD to the upside, and you've got lower tops setting in here. And as you look at these across the board, you'll see that that's what you've got looking at right here. It's going to be real interesting, very interesting indeed. But we have to take a look at the silver, because silver, being the compadre of gold, we look at the silver on the March. We want to get that hourly chart up, and you'll see we ran into some pretty stiff resistance today, folks, in the silver. This is what Jason pointed out to us earlier. We went up to 31. We just made a 382 now in the I just hitting right now in the S&P, folks. So let's see if it's got some action here. They're trying to save this thing is what they're going to try to do. We're going to find out whether they're going to be able to do it pretty soon here, because there's your 382 rally of the whole day's range here. We've rallied 45 points. And it looks like we're got another 2 hours to go. We could easily go up, maybe make a new high. Who knows the way these things jump around. But there's your 382 rally off of the high coming in here at 48.89. We're trading at 91 right now. This was all instigated. Well, not instigated, but the Dow, I pointed it out to you before, was the NASDAQ. It was the one that's telling you that there was a rally coming due. And there's, you've had a pretty good rally, a couple $1,000s, which is a big move. Now, there's no ABCD here. So that's it. This is where they had to come and protect. Do you know why, folks? You know what that number was right down here? That was one standard deviation on the week. And boy, when you have that, because you look at this on the daily, okay, you can see putting it up like this here on the daily, you know, we broke below the one standard deviation right there. Now we've rallied back to try to handle it. Fact is, John's probably sending me the chart now to show what it looks like. But anyway, there's we almost made a perfect ABCD here, also on the low. Let me just get this up here. Oh, doggone it. Just a second here. Okay, here's the ABCD right there. Right to the exact tick, folks. There it is right there. ABCD right on the bottom. And there it is right there. There's your A, B, C, D. NASDAQ was 2 standard deviations, John's telling us, on the downside, and that's why it held up. So this is why we came down, took out the lows of this level right here, didn't go anywhere, and made an A, B, C, D. I didn't see this until just a few minutes ago when I said, why is it jumping so quickly? And then I realized that's it. I've been so consumed from 9 until 12 and then getting ready for the show that I actually missed it. We had a great day, so I'm not going to be concerned about it. The key here is that where we're going to close here, because that's the real key to what we're going to. In fact, we had a rally. It doesn't really mean very much. This is a key here, the fact that we took out these lows and the fact that on the downside, the NASDAQ went to two standard deviations. The S&P had went to 1. Then here's, you can see the NASDAQ. This is where we were right there, 2 standard deviations. We've already rallied to 50% of the early morning overnight high that we had way back here. We've already rallied to 50% on it. And these rallies are equal. You see that? So you're basically just doing another A, B, C, D here with the NASDAQ. So that's what we're paying attention to today. So let's see how we are with the clock on the wall. We got to take a look at a couple of the stocks here. We're going to take a look at Mr. Appel here to see how it's doing for our friends over there in Boise, Idaho. Get it up here and take a look. Well, there's your reason for the rally, folks. You can see we've had a good $4 rally here in, $3 rally in Apple so far today. And that's all it looks like to me is an apple for Raleigh falling off the tree. So let's take a break. We got Mike Moore of More Analytics coming up, folks. So live every day in an attitude of gratitude, and may God bless, and stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks. I believe we have Mike Moore of More Analytics in the house today. Mike, how are you doing, my friend?
Larry, how are you, buddy? Thanks for having me on.
Just living the dream, baby, one day at a time. What are you showing us today, pal? This has some big moves in crude oil. What do you see here? It looks like we've had a pretty big run here.
Yeah, let me show you my screen. Can you see my screen?
I think so. Looks like they're telling me that they can see it, so that's a good sign.
Okay. Good. Let's jump to crude straight away.
Hold it. They're saying not quite yet, so keep trying to get that chart up because they're saying it's not quite ready yet. So if you'll try again, and hopefully we get it up and running. We want to look at the crude, the heating oil, gasoline for sure because of how they sync together that you've told us about. That's been it's pretty much spot on.
Are you not seeing my chart right now?
No, we don't see it. That's what they're telling me because I can't see it. And if they can't, there we go. We're up in business. Fire away, buddy. We're ready to go.
All right. Sounds good. So, sorry, that's the S&P. All right, crude oil. The trade back above 74.86. I'm sorry. On 12.9, we left a minor bullish reversal below. We rallied $8.43 from the 68.27 open, and then the trade above 69.92 brought in 678 of strength, and then another projection above 71.74, and then still higher above 74.86. That was for multiple different levels in here. We just broke back above this formation here and rallied up today. I would caution one thing though, just jumping around a second. The RBOB just failed back down below this formation. Now, which suggested it's bearish down. This should come off. The heating oil has not broken back below a formation similar in there. It pulled right back to it and popped here. But if this rolls over and fails these also, I think the whole thing is going to roll over again. And crude oil, likewise, if it fails back down through this formation, which is going to come in at 75.08. Plus 2.4 per hour starting at 1 o'clock p.m. Eastern Standard Time.
Very good.
One other thing. Just give me a second here. Just give me 1 second. Okay, so one other key thing in the crude oil. There was a major formation right here at 76.54.
Okay.
And I said that solid trade above there, which we did see solid trade, would project this upward $15 minimum, $24 plus maximum. But I said, note, it would be preferable to see a rejection off the line generally prior to breaking above, which we did not see. So that increases the likelihood of a failure, which we've seen now. So we failed back down through that line, and that's a significant failure. That means that this should probably come off for days with a solid stop back above the 76.54 line, and that line decreases by 6 ticks a day. Solid in, give me 1 second. Solid in crude oil today is 52 ticks. So that's bearish. The unleaded is bearish. And the heating oil, if that rolls over, that could be bearish too. That would be the last.
Okay.
You want me to jump to the RBOB and show over that?
Yeah, I would certainly do, because I've been watching more and more closely since you've been our guest, and it's really a great thing to trade. So please continue.
Okay, so in the RBOB, the trade above 198.03. It's brought in 11.18 cents of strength, a little bit more today. And like I said, until we failed back down through this high of 208.05 and took out this line. So now this is bearish. If we break back above this line decently, that's going to negate the bearishness. That line's going to come in at 207.65 plus 5 per hour starting at 1 o'clock p.m. Eastern Standard Time.
Okay.
And the heating oil, just stop me if you have any questions along the way. And all of these, by the way, if we see a maintained gap lower on Monday, would leave a minor bearish reversal above. So the heating oil, the trade above 224.47 has brought in strength up to 251.44. A nice move. We also broke above these two formations right here and shot up. If we fell back down through this, which is going to come in at 245.79 plus 10 per hour starting at 1 o'clock p.m., that will warrant decent pressure again. We were at level, we were bullish from down in here, bullish from here, bullish from here, and bullish from there. So that would start a cascade downward. Okay, so for the Brent, same thing. All of these gapped open significantly. I doubt they're going to close the gap before the end of the day, which means that gap will be left in place, which means that, again, if we leave a maintain gap lower on Monday, that would leave a minor bearish reversal above. And the Brent, the trade above 71.73 to 81 has brought in trade up to 80.75. And then more recently, the break above this line here, warrant of short covering, we've seen that, or strength, I should say, we've seen that. So we fell back down through that line again. That's going to warrant a decent pressure. That's going to come in at 77.07 plus 2 per hour starting at 6 o'clock p.m. Sunday. And finally, the gas oil, similar picture, gapped open higher. Took this formation back out on the upside, really screamed to the upside. I don't really have anything per se nearby to short below, but again, a maintain gap lower in there would leave a minor bearish reversal above. Do you have any? Let me just take a quick look at spreads for you real quick. This is also an example too of, like, looking at spreads, how they can help you out in seeing what's going to happen in the outrights. The June D spread broke back above this formation yesterday, which I said warned of strength. And we really saw that come in through here. Let's take a look at. And the RBOB to heat spread has continued to be bearish. It's broken down below. It broke back down below this line right here and really came off. That's why it's important to understand the relationships in these spreads. You can tell that just understanding this.
Got to pay a few bills, Mike. We'll be right back, folks. Mike Moore of More Analytics.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Mike Moore of more analytics. Sorry, I've lost my voice, Mike. So please continue.
How are you, Larry? So I just wanted to take a little detour here for a second. I wanted to highlight something for your viewers. Look, if you're trading the energies, if you're trading crude oil, to not understand what's going on with the RBOB and the heat, you're leaving a ton of money on the table, especially just on the higher time frame trades. And let me just explain to you why. Like in my analysis, I usually just go through these outrights while we're talking on here, but down below, which I never show, I have these spreads in here, like this RBOB to heat spread and these crack spreads. And these are really key to help you make a substantial more amount a year just deciding which market you're going to be long. So let me just give you an example. So in the RBOB to heat spread, just in here, this broke below this formation. And this has come off to the tune of $5,000 per contract.
Yeah.
And that's just in a matter of 5 days. Meaning if you were short the RBOB or long the heat rather than the RBOB, that's how much more you would have made just being on that contract with all things being equal. The heating oil crack broke above here, had a substantial move to $3,000 to the upside, and the RBOB crack was bearish with a move to the downside to 2360. So let me just show you what that means on the outrights. From December 30th, okay, which is right in here, this is December 30th, okay, crude oil rallied at most per contract $6,800.
Wow.
The heating oil from the 30th at most, rallied $10,000 per contract.
Wow.
And the RBOB only rallied $4,000 a contract. So if you were long the heating oil instead of the RBOB from the 30th, you would have made $6,000 more per contract on the upside and $4,000 more than the crude oil. And the thing is, all of these got bullish at the same time. All of them broke above formations at the same time. So how do you understand which one to be long? And those spreads, the work that I do on the RBOB to heat spread and the RBOB crack and the heat crack, those are what help you to determine which one you should be long. And they're not that hard to figure out. I mean, it's just a little bit of understanding on what they mean. But anyway, just wanted to share that with your viewers.
Yeah,
all right, you want to take a look at the S&P? Or
yes,
wait,
sir.
we're looking at natural gas yet, right?
Yep.
Okay, so natural gas. Sorry, I just shut that down real quick. Give me a second. So natural gas has been sliding upwards again. We had been in a bearish correction against this move up from here, fully corrected down into here and held this exhaustion. And then we've been rallying back up. Looks like today we're likely going to leave a moderate term bullish reversal below. I would probably continue a rally for days. I would note this run up here held this exhaustion level right here. It's 40 at 417.80, almost exactly with the 420.10 high, and rolled over into this. But right now we're bullish. If this rolls back over and it takes out this formation down below, that's going to avoid a decent pressure. That's going to come in at 350, 340. And it's going to increase 1.6 per hour starting at 1 o'clock p.m. Eastern Standard Time. Obviously, we're not going to see that today, but I would just keep an eye on that down below. And then you want to take a look at the S&P 500?
I think people have an interest in it, so let's fire away, my friend.
So the S&P 500 right now, right here, has just broken below a formation. We've been bearish from 61.1625. Now we've seen 250.25 to the downside, and then a little bit more than that today. And then from the break below 59.95.25 to 325. And a couple other levels. Now, we've just broken below this formation right here at 58.95.69, which is bearish and projects this downward about 160 handles. We did not get a decent penetration below this lower formation, which is a more significant and more important formation. We came within 3 handles of the decent breakdown of 38 handles to the downside. If this rolls over and takes that low out, we are projected downward 164 minimum, 295 plus maximum, which could start this into a bearish correction, because this in general is a topping formation. You can see the highs have been rolling over, the lows have been getting weaker here. So it's real critical right here. If we break back above this line decently, then this thing's going to rip. And I think we're going to head right back up into here, maybe even take out the highs. If we take out this formation, we got those big downside projections. If we take out this formation decently and trade back up through it decently, I'd be out of all shorts, long, and looking for a run for these highs again. So this is a real critical area in here. That's going to, whatever happens in here is going to dictate at least 160 handles in either direction, if not 295 handles. And this formation right here comes in at 58.96.07 plus 10 per hour starting at 1:30 p.m. Eastern Standard Time, and the lower of which comes in at 58.78.51 plus 2 per hour starting at 1:30 p.m. Eastern Standard Time. And again, your decent penetration is 38 handles today. That changes daily.
Okay.
Okay, and then we go to the gold. Okay, gold has just been creeping up the past number of days here. We held a significant formation up in here, which is good. We wanted to hold this before breaking above it to give it added credibility. Should we take that formation out, which is going to come in at 27.29.90 minus 0.6 of a tick per hour starting at 1:20 p.m. Eastern Standard Time. That would have significant projections to the upside to the tune of 150 plus per ounce. And we have a significant formation down below here. We're nowhere near it, but just to give you a heads up, that's going to come in at 26.33.50 plus 1 per hour starting at 1:20 p.m. and a decent break below there. I took out my projections in here, but it would be substantial to the downside, a number of days at least. And then finally, the Bitcoin just turned bullish now. We had been bearish from the...
Okay, we've got to take a break. Stay with us, Mike. We've got a little segment to tell folks how to reach you when we come back. So please stay with us, Mike. More analytics.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back, folks, with Mike Moore of More Analytics. Mike, tell the folks how they can reach you to get a sample of what you do.
Right here. Can you see this on your...
Yep. Say it too, because people are in their cars and homes and stuff that are not watching, but they're listening.
You can reach me at moreanalytics.com. More is just spelled M-O-O-R with no E at the end. So moreanalytics.com. Or you can shoot me an email at moreanalysis@gmail.com.
Oh, okay, good.
If you want to call me listen, phone, you can give me a call if you want.
Yeah, I'd like to. Can we do the gold? Did we?
We did the gold.
That's what. Do you do the question I had? Do you do silver?
Don't do silver.
Okay, not a problem. All right, this is good. Listen, anyway, we want to have you back on again soon, so keep up the good work. It's been spot on the crude, gasoline, and heating oil. So keep up the great work, Mike. We really appreciate it.
I want to tell you about the Bitcoin if you want.
Oh, that's good. That would be a great one. Thank you very much. I had it written down here and I missed it. So please continue.
Right. So the Bitcoin just turned bullish right now. So we had been bearish from the held exhaustion above at 108,960. We rolled over 17,225. And then the trade below, these other ones had us bearish as well. However, the break back above this 94,132 plus 5 per hour right now has this bullish. That suggests this is probably going to run up and test this 103,685 area. and maybe even make a run for the highs. If we were to fail back down through it decently, I'd be out of your longs. That line's going to come in at 94, 155, plus 5 per hour starting at 1 o'clock p.m. And decent is 1825 through the close today.
Okay, great. Listen, thanks for joining us, my friend. We'll have you on again soon, okay?
Thanks for having me on, Larry.
You bet. Mike Moore, More Analytics, folks. Live every day in an attitude of gratitude. We'll see you all Monday. May God bless.